Good morning. This is Rich Nelson with Allendale here, discussing the day's issues here. Today's Thursday, September 18th of 2014. Now, for outside market issues, as far as bigger picture stories, of course, the U.S. dollar continues to react to yesterday's FOMC meeting here, our meeting wrap-up here. U.S. dollar right now hit new high overnight, in fact, and now we are just a tick or two away from retesting the 2013 highs in the U.S. dollar. The overnight high was 84.743. The highs from 2013, the entire year, 84.753. So very, very tight numbers as far as U.S. dollar goes. And, of course, that does add pressure for us on the overall commodity side as well. So keep in mind this overall trend of the U.S. dollar has been a negative impact for us on the grains and partially livestock as well here. Now, as far as other news here, export sales out this morning. Numbers as far as corn and soybeans, really to speak of, maybe kind of neutral. You could certainly argue for a slightly positive tone on soybeans. For corn, 660,000 metric tons. That was within the average guess of 550 to 750. Now, keep in mind, as far as corn sales year to date, we're sitting at 13.0 million tons. That's actually down from last year's 13.2. So keep in mind, we've got a record crop this year. We've got to get it moved out, and you should have higher export sales. Right now, year to date, actually running lower than last year. So still some lagging issues on corn to get fixed up as far as that goes. Very clear message there is buyers are waiting for lower prices still. Now, as far as soybeans, 1.467 million tons of sales overnight. That was higher than the highest guesses here. That was from 1.1 now up to 1.4 for the upper end of the range. So a little better sales than expected as far as soybeans. Now, as far as the year-to-date numbers, 25.5 million tons of sales so far. It's actually pretty good considering 21.4 last year at this time, and those are in million tons. Now, as far as wheat numbers are actually a little disappointing there, 315,000 tons as far as wheat sales in the previous week. That's lower than 450 to 650 expectations. Now, as far as other issues to speak of, we do have some margin changes to note here. Margin is the deposit required to hold one futures contract. In this case, we're going to quote some speculative changes. As far as corn, margin fell from 1650, that's 1,650, down to 1375. Soybeans margins fell from 3,300 down to 2,750. And as far as wheat, it looks like margin fell from 1,650 down to 1,430. And margins, of course, always reflective of volatility. Now that we've made the big moves and the markets is slowing down here, the CME Group certainly notes that volatility is lower, therefore your deposit is needed. Deposit need to hold a position is smaller as well. In terms of other news for grains, as far as wheat goes, Japan bought 109,000 tons of food wheat from U.S., Canada, and Australia last night. No major change as far as that goes, as far as surprises. Hungary, the agriculture ministry here, suggested this year's wheat crop at 5.2 million tons, a little higher than last year's 5.1. And as far as wheat, also keep in mind, we just posted new lows on the overnight session. So action day for grains, corn right now down about 2 cents, soybeans down 2, and wheat down 5. Now, as far as livestock goes, last trades on cattle down 60 cents. We do have pressure going on, as the fact is, so far wholesale beef has fallen all week, down $1.73 and 64 cents for yesterday's choice select numbers. Now, as far as overall trading, even though we're down 60 cents today, it's really not that dramatic. One thing which is keeping this market up is cattle on feed expectations for Friday. Allendale's numbers are 99.0. That's for total cattle on feed. For replacements, 94.8. I believe that's going to be 4, if not 5 months in a row of lower placements. And for the month of August, this will be the lowest placement of any previous August as well. So that keeps the market giving a little support right now. Over on marketings, looks like 90.5 is our estimate here. Keep in mind for marketings, we do have about a 4% adjustment with a calendar day difference. That's why it's not about 4 to 5% as you expect as far as a decline. Now, over on the hogs, we are having a significantly lower day. It looks like a $2 break on October and December contracts right now. Biggest issue here is after 2 weeks of rallying, looks like cash hog markets are finally finding that seasonal peak. We are keep in mind as far as numbers, we've got higher supply lined up for the month of October than right now. In addition, we all know that National Pork Month features are about wrapping up as well as far as the procurement for October's pork month. So with that in mind, looks like we finally changed things as far as this market. Cash hogs yesterday down about 6 cents on the Iowa-Minnesota cutout, or Iowa-Minnesota run. For pork cutout, down 64 cents. So pressure there as well. And now, even though we've fallen pretty good here in the last 2 days, let's look at these numbers. The lean hog index, what cash hogs are valued at according to the CME's calculation, 104, roughly 105. October futures right now, 103. So despite still much more hogs lined up here in the coming month and also lower demand ahead, this market thinks we're going to price cash hogs only $1 lower. So quite a bit lower trade is what we're saying for hogs in the big picture here. So action day looks like lower on grains, and as far as livestock, a little bit lower as well. If you have any questions about markets or marketing, feel free to give Alan a call. Our number is 1-800-262-7538.